According to the Energy Transitions Commission, $3.5 trillion in average annual capital investment is required until 2050 to build a net zero economy. Thanks for joining us, Roberto. How do we raise this capital?
Well, we have a big challenge ahead of us, of course. The numbers you've mentioned is massive. And that's why we call it the energy transition, of course. We're moving away from the traditional, what has been for the last 50, 60, 70 years, into the new landscape of energy, of green energy, sustainable energy. Funding is going to be key to the energy transition. And large investors, like institutional investors, are going to be key to support the energy transition. We have seen already a massive shift years ago from these institutional investors into the sector. In fact, ESG policy are extremely supportive, of course, of investment into the sector and moving away from the traditional area of energy. So institutional investors are becoming extremely important. They've always been important, but even more now. Why? Because they have large pocket of money. And also not only that, but they also have capital that is cheaper than other sources of funding. And so reliance on institutional investors is key. Obviously, that comes with its own challenges because, of course, you can access large capital at relatively cheap funding, but you need to create all the transaction, all the project structures in a very bankable way.
For energy sector projects, what are some innovative forms of financing we should keep on our radar?
Well, we're seeing, of course, innovation on the financing side as well. Project finance is still going, but it's slightly changing. We're seeing a lot of lease transactions, where a lot of investors are buying land on behalf of the projects and then renting the whole development back to the owner of the project, making more accessible and reducing the capex that they have to spend to start with. There's been other form of innovative financing. I'm not going to mention green bond because it's been there, done that. But we're seeing a lot of funding going into this.
BESS projects and their bankability have been hot on the press. Europe, China, the US, how do these markets compare?
Well, there are three extremely different markets. In fact, Europe, I wouldn't consider a market. Europe is extremely fragmented in terms of BESS regulation and support. We're seeing the UK as the leading market, started in 2016-17 with the first auction for the fast frequency regulation, and then developing extremely quickly. And then we have Germany, which is another established market, but then Italy now is coming up as the new hot market. The government is coming out with a very strong support for large investors to invest in storage projects. It's called MAXE. Well, they offer contractualized revenues for up to 15 years. And that is creating a very strong interest from the large institutional investors because that's exactly what they're looking for. Contracted revenues for long-term. Spain, Portugal, these are the new markets. Portugal has just come out with an auction for a grant just a few weeks ago to support the co-location of BESS with PV. We know that regulation in Spain is coming. So every country in Europe has a different way of supporting storage. Why? Well, because every market is different in Europe. The UK network, electricity network, is different from the Italian market, from the Spanish market. The energy mix are different across Europe. I mean, look at France. They have massive base load coming from nuclear, while Italy has zero nuclear and a very deep penetration of renewable energy. Then when we go to the US or China, well, as we know, China, they are leading the market because they don't need anyone else. They have the resources to create storage facilities. They have lithium. They have manufacturing facilities. Europe is extremely behind the manufacturing facilities. I think Europe is missing the boat on that. They had the opportunity of creating manufacturing of storage, but we all know what's happening these days with the manufacturers of storage across Europe. China, they have the resources, as I said, they have the manufacturing, they have the market. They have their own market. So we should actually be careful in depending on China too much. US, well, it's a matter of days to see what's going to happen.
Absolutely. When it comes to investor appetite for these different types of projects, what are some of the challenges that we face in spurring interest?
So storage is quite an interesting sector. First of all, storage requires a large amount of capital. We're talking about billions across every country in Europe. I mean, if we look at the targets in Italy, 12, 15 gigawatt of BESS installed by 2030, that means billions, 12 billions of investment in terms of just CapEx. The sources of this funding is, as I said, institutional investors. They have the big pocket to support this. The problem is that the revenue stream generated from battery storage is very suitable for trading companies. So the problem is that it's a trading asset, obviously, because you buy electricity low and sell it high by nature. So unless governments come up with support schemes of contractualize some of the revenues, it's going to be difficult for the large pocket of money to support an asset that is very suitable for a trading house. But the trading houses, they're not used to holding physical asset to trade. They trade contracts. They don't have the capabilities, the funding available, the billions available to buy this kind of asset and trade these kind of assets. So the perfect animal for me as a developer of asset would be a trading company with very deep pocket. That would be the best. But otherwise, we have to rely on contracted revenues until storage projects become pure infrastructure revenue led. When we get to the point where they become part of the network, hence an infrastructure kind of asset, hence the revenue stream is tailored for the infrastructure investors, it will be interesting to see how the large investor come into the market.
An issue that continues to be a bit of a pain point is that of the risk-return portfolio. Would you say it's a deterrent for net zero goals? And if it is, how do we overcome that?
A risk return will always drive investment. Always. I always say that we can only deliver the energy transition only if we create value. And of course, value is directly correlated to risk. The more risk you take, the more value, the more return you have to offer. And the interesting thing is actually there are different pockets of money. There is money for development, which is the highest risk. There is money for construction. There is money for long term. There is different kind of money with different return expectation. As I said, the problem with BESS is that it's not a commoditized asset yet. And it has a stack of revenues that it can rely on. And so if we want the cheap money, then we need to offer the lower risk. Hence, the infrastructure-like kind of return. So the Italian government is trying to do that with the max offer a 6-7%, which is actually good for infrastructure over 15 years. The problem is when the risk and return don't match. And so if you go to market and you can only make out of batteries 6-7% and use it as a trading tool, the money is not going to go there. The money is going to go where I can get 12%, 15%, 20% with a trading tool. So risk return is always going to be an issue. And this is the ability of developers, of governments to create a product that fits the right kind of money, the right pocket.
Roberto, thank you so much for joining us and sharing your insights. For more insights into the energy transition, make sure to join the Enlit community.